In the world of investing, the wisdom of Warren Buffett stands as a beacon of financial acumen. Discover the key assets that the Oracle of Omaha deems superior to hoarding cash. Uncover why these 5 assets, backed by Buffett's sage advice, are poised to outshine traditional cash holdings. Picture common stocks as your backstage pass to the thrilling world of business ownership. Warren Buffett, the master of investments, champions these stocks because they are your ticket to an adventure filled with potential rewards compared to the dull life of hoarding cash. Here's why common stocks are your financial roller coaster. Number 1. Ownership and profit sharing. Imagine owning a piece of a company. When you have common stocks, you're a shareholder. That means you're in on the action. You get a slice of the profits through dividends and enjoy the heart-pounding ride of capital appreciation as the company races to success. Number 2. Inflation hedge. Cash? It's like a balloon losing air over time. Inflation makes it shrink, but common stocks are like a turbocharged rocket, historically soaring above inflation, protecting your hard-earned money from deflating into oblivion. Number 3. Diversification. Just like a buffet with a variety of delectable dishes, investing in a mix of common stocks lets you spread your risk across different industries and companies. This diversification strategy cushions the blow if one stock fumbles the ball. Number 4. Long-term wealth creation. Buckle up for the buy and hold strategy. Buffett's secret sauce is all about strapping in for the long haul. Quality stocks grow in value, and by hanging on, you witness your wealth snowball as returns compound over time. Imagine you threw $10,000 into a top-notch company's stock a decade ago. Fast forward, and not only has the stock price sprinted ahead, but it's also been paying out dividends along the way. Your initial $10,000 could now be a treasure chest of far more wealth than a pile of boring old cash. While common stocks do have their twists and turns, your mission is clear. Do your research, pick winners, and be patient for the thrill ride of a lifetime. Buffett's endorsement of common stocks is like a nod from the ultimate roller coaster enthusiasts. They're your ticket to exhilarating financial growth. Dividend-paying stocks, the rock stars of Warren Buffett's investment world. These aren't just any stocks, they're the ones that can groove to the beat of your bank account and keep the party going. Here's why they're the life of the financial fiesta. Number 1. Income and growth. Dividend-paying stocks aren't your run-of-the-mill wallflowers. They're the life of the party, showering you with regular dividends while also busting moves on the dance floor of capital appreciation. That 1-2 punch can outshine the dull beats of cash. Number 2. Inflation hedge. In an era where inflation tries to steal the spotlight, dividend stocks don their superhero capes. The dividends grow and groove, helping your income keep pace with and sometimes even outpace the inflation boogie. Number 3. Stability and quality. Buffett isn't just into any old dance partners, he prefers the steady, well-established ones. These companies are the graceful ballerinas that keep twirling even when the market's disco lights flicker. They're like the timeless classics, playing their hits on repeat with consistent dividends. Number 4. Compound returns. It's like a financial dance-off where you keep reinvesting those dividends. Over time, it's not just dance moves you're multiplying, but your investment's total return. That initial investment can transform into a booming dance floor of wealth while cash sits in the corner sipping a boring drink. Imagine investing $10,000 in a dividend-paying stock with a 4% dividend yield. That's a $400 annual income just for showing up. Now, if the stock struts its stuff and appreciates by 5% each year, your total return could be disco-worthy, leaving cash in the dust. And if you reinvest those $400 in dividends, your wealth multiplies like a dance floor packed with eager partygoers. While the stock market's dance party comes with its share of surprises, dividend-paying stocks are your surefire way to groove your way to wealth and keep the money music playing. Warren Buffett's love for these stocks is like a standing ovation for their potential to make your finances a perpetual celebration instead of letting your money gather dust on the sidelines. Bonds, the yin to stocks yang in the investing universe, have also earned a spot in Warren Buffett's financial jigsaw. Why, you ask? Well, let's lift the curtain on the secret sauce. bonds are like that cool, reliable friend who knows how to balance safety and income while making the whole investing party a blast. Number 1. Steady income. Picture bonds as your paycheck, paying you regular interest on the money you've lent. It's like clockwork, delivering a dependable stream of income. Way better than watching your cash collect dust, right? Number 2. Capital preservation. Bonds are the safety net in your investing circus. While stocks can be the daredevils, bonds are the trapeze artists known for their safety record. They help preserve your hard-earned money, especially when the stock market decides to go all acrobatic. Number 3. Diversification. Buffett knows that a diverse playlist keeps the party going. Including bonds in your investment mix is like having a variety of dance tunes. When stocks get a bit too wild on the dance floor, bonds provides a smoother rhythm to balance things out. Number 4. Profit potential. But here's the kicker, bonds can be stars too. If interest rates take a dip after you buy a bond, it becomes the superstar of your portfolio. With a higher fixed interest rate than the market, your bond's value can rise, potentially allowing you to sell it at a premium. It's like your investment doing the moonwalk while you collect both interest and capital gains. Imagine a 10-year bond with a face value of $10,000 and a 4% annual coupon rate. You grab it while prevailing interest rates are partying at 5%. Later on, interest rates mellow out to 3% and your bond with its 4% rate becomes the belle of the ball. The bond's market price goes up and you can sell it for more than its face value. Sure, bonds may not offer the heart-pounding excitement of stocks, but they're the dependable DJ keeping the rhythm and adding flair to your investment party. Buffett's approval of bonds is like the endorsement of your go-to party companion. They offer safety, income, and even a chance to make some profit, ensuring your financial fiesta is way more entertaining than stashing your funds in a cash jar. Warren Buffett, the investment wizard, sees real estate as his enchanted castle, and he's got some magical reasons to recommend it as a captivating asset. Real estate is like the treasure chest of safety and potential profits, making it a fairy tale choice compared to the sleepy world of hoarding cash. Here's why real estate has that special sparkle. Number 1. Tangible asset. Real estate is like owning your own kingdom. It's as real as a castle. When you own property, you can touch it, walk through it, and live in it. It's like a security blanket for grown-ups. Number 2. Income generation. Real estate isn't just a pretty face, it's a cash cow too. You can generate rental income, turning your property into a money-making dragon that breathes a steady stream of gold, helping you slay the stagnation of cash. Number 3. Appreciation. Your real estate is like a magic beanstalk that can grow over time. With the right location and a bit of fairy dust, the value of your property can shoot up like Jack's beanstalk, giving you enchanting capital gains. Number 4. Leverage. Real estate is like a genie granting wishes. You can use a small chunk of your own money, the magic beans, and get the rest through a mortgage, like rubbing the lamp. This leverage can make your potential profits soar like Aladdin on a magic carpet ride. For example, let's say you buy a rental property for $200,000 with a 20% down payment, which is like investing $40,000 of your own gold coins. As time goes by and property values rise like Sleeping Beauty waking up, your $200,000 property could turn into a princely $250,000. If you decide to sell, you've just made a profit of $50,000, which is a fairy tale ending compared to stashing your cash under the mattress. While real estate may need a bit of a fairy godmother level care and attention, it offers a charming mix of income and capital gains, making it a well-rounded investment. Warren Buffett's endorsement of real estate is like his stamp of approval on a fairy tale adventure that's safer and more profitable than watching your money gather dust in the enchanted forest. Cash-generating assets are like the rock stars of Warren Buffett's investment band, and they absolutely know how to steal the spotlight. These assets groove to the rhythm of safety and profit, turning them into the ultimate headliners, while cash sits in the nosebleed seats of the financial arena. Here's why they're the showstoppers. Number 1. Consistent cash flow. Think of cash-generating assets as your personal ATM with an endless supply of cash. Rental properties, royalties, and thriving businesses are like hit songs on a chart-topping album, churning out a constant stream of income, while plain old cash looks like a one-hit wonder. Number 2. Inflation shield. Cash is like an ice cream cone on a blazing summer day. It melts under the heat of inflation. But cash-generating assets are the superhero tracks on your playlist, cranking up the volume on their income over time. They're the evergreen tunes that keep playing and protecting your purchasing power. Number 3. Diversification. Buffett knows that putting all your money eggs in one cash-filled basket is a snooze. Cash-generating assets are like a mixtape of different genres, diversifying your portfolio and creating a harmonious investment playlist. They're the ultimate financial DJs, spreading the risk and turning your investments into a musical journey. Number 4. Profit potential. These assets aren't just one-hit wonders, they're chart toppers that keep climbing. Beyond the steady cash flow, they can appreciate in value like a hit song going platinum. Imagine your business or real estate property skyrocketing in worth, delivering both a solid beat of income and a catchy chorus of capital gains. Take a rental property for instance. You acquire it, rent it out, and enjoy a monthly rent check. After covering the bills, what's left is pure profit. Over time, as the property's value rocks to a higher tune, you could sell it for an epic encore, making more than your initial investment. While cash-generating assets may need some fine-tuning and management, they offer a financial symphony that leaves cash-collecting dust in the nosebleed seats. Buffett's love for these assets is like a never-ending encore, proving they can deliver both security and a rocking profit potential, making them a thrilling and vibrant alternative to the mundane old cash stuffed under the mattress.